We are with the Can-Am man, Thomas Lorini. What's up, buddy?
How are you, Kenner? Pleasure to be here.
I love it. I'm not sure why I call you the Can-Am man, but although I should be sure that I'm calling you because you have lived in Canada and you live in America and you know real estate in both, right?
Correct. So I'm a dual citizen, actually. Born and raised in Toronto, Canada. Moved to the U.S. Married an American. That was my lucky golden ticket into the U.S. And I've been here for almost 11 years.
Look at you, look at you. So I'm gonna throw something at you really quickly. So you know about real estate. You're basically kind of a partner, as I understand it, in Wealthgenius in the U.S. Add some value right off the bat. What's the one piece of advice you would give to an investor, let's say a real estate investor, which most of our listeners and viewers are, who's been around for let's say 7 years, they got some dough, and they want to get rich using real estate? Go for it.
Wow. Wow. Now, putting me on a spot just like that. I mean, someone with 7 years experience, I have to assume that they've done several deals. They've got a few assets under their belts. They've probably dabbled in some buy and holds, maybe some flips and so forth. I mean, in today's market, I think it's really important to hunt for good opportunities. The right market is going to be very important. I always look for landlord-friendly environments, that predictability that it offers versus these tenant-friendly markets. I've invested in both, and I could tell you it's a much better situation when you, as the landlord and owner, have much more control. I think opportunities, looking at markets, running your numbers, being opportunistic. At the end of the day, too often, I was just talking to someone earlier today, and overanalyzing tends to be a thing for a lot of investors, and they go like a year or 2 years without pulling the trigger on anything. So, of course, you want to do your due diligence, but you have to get in the game. You have to start transacting deals, and you can't expect every deal to be a home run. So obviously do due diligence, but take action. All right. Because I mean, when you look at a portfolio, you can't expect every deal to be a home run. You'll have some singles, some doubles, maybe a couple home runs. Every once in a while, you have a deal that kind of goes sideways, but it's all part of the game. So I would just want to encourage people to take action, look for the right markets, do your market investigation, building your local power team. I mean, where I invest, Kenner, I don't live. So it's really important for me to have a solid local team, property managers, contractors, insurance agents, lenders, all that good stuff in that particular market, because that's going to really propel me to success. So wherever you're looking, I would suggest you to visit that city, spend a couple of days, shake some hands, put a face to people, build those relationships, and take the action.
Yeah, that was good. I mean, that was good. As I mentioned, I'm gonna throw some hard balls at you. So let's learn about you first of all. By the way, the reason you're on this show is because I've heard good things about you. Number one, you're a big name dude in the industry, and I know you're a good guy. I've worked with you long enough that I know you're a good guy. So let's learn a little bit about Thomas Larini, Cam. Tell me a little bit about you, your background, and how you came to be a big time real estate investor.
Yeah, great. So again, as I mentioned earlier, born and raised in Toronto. My background's mechanical engineering, so I didn't grow in real estate. I didn't have anybody in my immediate circle who was investing in real estate. Went through schooling, got into manufacturing industry, worked my way through different positions, worked in the automotive industry for many years. And really, it was my very first property that I bought after moving out of my parents' home. It was a 3-bedroom townhouse, which had a basement. I'm like, you know what? It's too much home for a single guy. I rent that basement. That one tenant was paying my mortgage. I'm like, ooh, I like this. I need to do more of this, right? So looking back, I mean, that strategy today is called house hacking, right? When you're renting a portion of property or a unit to someone else and subsidize your living cost. But I put all my money into that first property. So I mean, I read books, went on YouTube at that time, but really, I mean, I didn't have the education and the support system to really understand how to get into real estate investing. So fast forward 4 or 5 years, I joined the group, and within months, I'm in my next property, right? I bought a duplex about an hour away from where I live. So really, for me, it's putting myself in the right environment because again, no friends, family were in real estate at that time, and within a short period of time, I got the education, built my power team. That particular group had the accountant, had the right lawyers, had the right lenders. They all worked with real estate investors. They were investors themselves, right? Versus like the accountant I was using was like my dad's accountant, right? It's just a traditional CPA. So it's really important to get in those environments where people are doing the things you want to do. And then from there, start to pull the trigger. I mean, I pulled a HELOC and went and bought up in my that first duplex, and then wait some time, bought another single family, bought some condos. So I created a little portfolio, 5, 6 properties, did some flips, and but I was still working full time in manufacturing. I ended up opening my own machine company, had that. But it really was kind of the decision to move to the US, which was the trigger for me to go full time into real estate, because I'm like, we're moving to a different country across, the continent. And for me, I'm like, well, I can't take my business with me. So I ended up selling the business. We moved to the US, and, that was me taking a step in real estate, but it wasn't easy, to be honest, because a new environment, I wasn't in the US system, so I had no credit history. It wasn't like I was getting all these financing options. So it was definitely a learning curve. And this was like in my mid 30s, we're talking about, again, 10 years ago. So I put myself in a somewhat challenging position, but it really helped me to grow. It really challenged me, but stretched me in so many different ways. So I want to encourage all of you, sometimes life presents challenges. Don't run from those challenges, because really that's what's going to really make you. You learn from those experiences. So push through. I know we all want it to pass quickly, but sometimes it lasts several years. But for me, get this, Kenner. When I moved to the States, I couldn't get a credit card. I had to give the local bank like $1,000 cash, so they would give me a secured credit card to start building my credit. I felt like I was like 17 in my mid 30s. So, I mean, that's the extent of like starting point I walked into. And I didn't know anybody, in California. I only knew my wife's family. But, we moved for the weather, for my wife to be closer to her family, the lifestyle and all that good stuff. But then from that starting point, I really figure out, the path I'm going to take in real estate. I did some land development. My father-in-law is a builder and developer, so I worked with him for a few years, learned that side of the business. I was continuing doing deals in Canada long distance, and that, again, proved that you don't have to live where you invest. So again, that was like, well, I have properties in Canada. I'm self-managing it. I can do this. So I kept buying properties in markets I was familiar with, start JVing. People start saying, hey, you're doing all this business. You're starting to do business in the U.S. We want to partner with you. So that was another growth for me, right? Because initially I was doing all on my own, right? I used my own money, my own experience. But then once I opened up the opportunity to partner with people, then it was like the floodgates were open. So I started expanding other markets. I did a deal in North Carolina, and ended up looking at Ohio. An investor here in California introduced me to Ohio. So went out there for 4 or 5 days back in, I think, 2017. And I'm like, whoa, this is a completely different market, but this is interesting. Homes here are like 100 grand, 80 grand. So I pulled the trigger, bought my first single family rental for $80,000 and rented for $1,000 a month. And I was like, this is pretty great. And on top of that, the seller provided me financing. So I got a 6% fixed rate for 30 years. I'm like, this is cool. I mean, it's completely different. Like in California, where average home was like $1 million. So I was like, okay. So, one deal turned into 2 deals, into 3 deals. And then, then the rest is history. I mean, now I'm doing apartments.
Yeah, I see you're doing big commercial deals. So, wow, okay. So I think a lot of our investors are starting to do one commercial, but also to invest outside their outside their backyard, if you will. So let's go into that a little bit, because I think that you add a lot of value in there. So tell me a little bit more about that. You said, oh, you have to build your power team because you might not be next door, they're outside your neighborhood. Tell me a little bit about building the power team, and also help people make that transition into investing outside their backyard.
Yeah. It's a good conversation itself. I mean, so often investors, we want to be close to what we own. We want to touch and feel the building, the property. There's a sense of pride to go there, look at your property, and be able to walk through it. I get it. But tell people all the time, I mean, you have to realize, I mean, the opportunities are across the all of North America, really. Don't limit yourself only in your backyard. Because what ended up happening for me, the market I started investing in, the prices started to get so high that deals weren't penciling out anymore. So then I expanded. I went 4 hours away. I'm like, okay, deals were still made sense in this market. And then eventually that market started to tap out. So I kept going where the opportunities made sense. People are afraid because they think, hey, if I'm not able to go to the property, it's going to be, the risk is high. I'll check on things. I won't be able to make sure things are like, properly in order and all that stuff, which to some extent is true, but you really have to create that team, because ultimately I tell people, why do you even invest in real estate? Are you trying to create more work for yourself. So I think most of us traded for financial freedom, a retirement plan, and really it's an investment. So you don't want to get caught up into it that sucks up all your time and energy. You need to be able to balance that. For me, sorry, and before I get into that, my next thought was, I do want to say the laws in different markets are very different. So I mentioned earlier, like landlord-friendly markets versus tenant-friendly markets. That can really make or break your business. So I'm based here in Southern California, very pro-tenant. If you got a challenging tenant, it's very tough to evict them, and you can go a year plus with no rent. They can damage your unit, very limited recourse. So all that can really sink your business. And I've heard nightmares. I've had some properties in Canada, which I still own, and I've gone through challenges because very similar to California, very pro tenant. So you're dealing with tenants that a year plus, again, not paying rent. They can work the system. So I tell people, I'm like, you can operate in that challenging, risky environment, or there's other options versus, like, for instance, Ohio, which I discovered. I'm like, the eviction process is very quick. A bad tenant, I mean, that will end up, if they go through the eviction process, it's on their record. So the next landlord can see it. So that's huge because now I go and buy a property, I have that predictability. Okay, there's no rent control. I can put the rent to whatever I want, which in other markets you can. I can evict the person if they stop paying or if there's problems with them. And after the lease is over, I'm not forced to keep them in there. I'm like, your lease is coming up, thank you very much. I'm not going to renew it and move on. So you have that predictability and control that ultimately, as a landlord, as an investor, that's a huge factor to consider. And that's why I stress, don't limit yourself to your backyard, right? And again, because it's long distance, I'm relying on my local team, which takes time. I get it. It's a relationship-based business. You got to find the right team, the right property management company, and so forth to manage it. Now you manage them, and you can do that from long distance, but really creating the systems and processes. We do once a week Zoom calls. We got pictures, videos of the any improvements and renovations we're doing to the property. We're seeing the rent roll improvements and what's going on with tenants. So all that stuff we're managing from long distance. And every quarter or every 6 months, we actually fly out, visit, walk the properties, and make sure.
I think that's smart. Me personally, I haven't been to I have a duplex only about an hour and a half away. I haven't been there in years, like probably 10 years. I mean, I
Right.
properties in California, I've never been there. I have properties all over the place. I've just never been. I think it makes sense. If you have a good core, as you call them, power team in place, you're good to go. It makes a huge difference. It really does. But I think there's risk because you don't know if some of those, the people in the power team are doing a good job. But at the same time, if you have, let's say, as an example, you have 10 properties around you for sale, well, then it's 10 properties. It's harder to find a good one. But if you have 1,000 and they're 4 miles away, let's say, or whatever, 20 miles away, whatever the case is, well, your universe is bigger. You have more to choose. And then who knows? Maybe you're going to make more money as a result. I think investing outside your backyard makes a lot of sense in a lot of cases. And have you ever seen the movie Pacific Heights, by the way, with forgot the actor, where it was just a horrible, horrible experience for the landlord. The people who were renting it were just horrible, ran the owners to the ground. It was a bad, bad deal. Anyway, there's some horror stories, but then again, as you were mentioning, obviously it makes a lot of sense to invest outside your backyard. Now,
Right.
wait a minute. So help me to understand a little bit more about the Canada thing. So in general, where would you say is better to own, U.S. or Canada?
So you mentioned earlier that I'm part of a group, partner in Wealthgenius. It's a group that started in Canada. We've expanded now. We've got members all across North America. I present regularly, to the group and to the members. And my whole message is like, I mean, there are differences between Canada and US, right? I mean, number one, Canada's a smaller market in general. It's probably a tenth of the size in terms of population and opportunities. So the challenge for most investors in Canada is finding good deals. But what's happened is that the price points are substantially higher compared to average prices across the US. And then you factor in the laws and so forth. So now you're kind of like behind the eight ball in comparison. So I'd say, like, I'm not saying don't invest in Canada. Again, I still own a portfolio of assets in Canada, but realize you've got markets where it's much more affordable. I mean, I always talk about this. There's over 10 states where the median home price is less than $150,000. the median price of a home across the entire U.S. is 400 grand. In Canada, the average home price is like 700 grand. So it's a lot more expensive, less affordable, higher taxes. The lowest income tax. So there's so many different types of taxes, but let's talk about income tax. The lowest income tax level in Canada is higher than the highest income tax level in the U.S. So there's that factor, property tax, insurance, all these other factors to consider. In summary, there's a lot of reasons why Canadians need to consider investing in the U.S. But I think the top two, there's more opportunities, more affordability, and then the landlord laws that play in your favor.
Wow, I really didn't realize that the tax basis, if you will, in Canada, that kind of scares me if you think about it. But
Yeah,
I guess it depends on what you're looking for. In some cases, it makes sense to invest in Canada. In some cases, it probably makes sense to invest in the U.S. Really depends on the circumstance.
right. And Canada, there's so many different realms within real estate. You want to do new construction, you want to do flips, you want to do buy and hold. So that's another factor to consider. What are you trying to do? It may make sense to do something more local if you plan to live in it, house hack or add an ADU, those kind of strategies, right? Versus, more traditional buy and hold. What I do is more value add apartments, buying underperforming property, fix it up, add that value, increase the rents, and then refinance capital out. So, again, there's risks everywhere. It's just really mitigating those risks.
All right, so tell me a little bit more about Wealthgenius. Now, I'm not paid in any way by Wealthgenius. You're on here because I know you're going to add some value, and maybe Wealthgenius can add some value. So just go ahead and tell us a little bit about Wealthgenius.
Yeah, so Wealthgenius is a group, again, based in Canada, founded in Canada by Alfonso Quadra. When I joined the group, there was about 120 members. This is about 2.5 years ago. We just crossed 1,200 members across North America. So we've 10x over the last 2 years.
All because of you, all because of Thomas Larini.
No, I mean, honestly, great bunch of people. It's an educational networking group. So within the group, there's a lot of content, education. We could take people who are brand new in investing or really experienced people and level them up. The networking within the group, people are doing deals among each other. But for us, it's the expansion. I've really been helping to push the growth into the U.S., helping the Canadian understand, hey, we can invest in the U.S. and these are different markets within the U.S. we can invest in. There's mentorship. We really have a program in place for people to come in to get the mentorship, get the support system really, and you've got a lot of opportunity within the group. As I mentioned, we have a marketplace that people can post their own deals. We've got also people partnering up within each other. So it's been a great group to be part of. And it's exciting to see the growth just in the last couple of years. So, I mean, trajectory over the next couple of years, I'm sure, we're going to cross a couple thousand members shortly. But, for anyone looking for education, support, really, I would suggest them reach out to us. I tell people all the time, the secret sauce within Wealthgenius is the people. We've got a lot of great people doing some really amazing things. And the whole stream of investing, people doing STR, short-term rental, Airbnb, people doing land development, people doing wholesaling, people doing BRRRR strategy, apartments. So really caters to really any type of investor.
So tell us, you said they can get a hold of you. How does someone get a hold of you and Wealthgenius?
So the easiest way, I'm on Instagram, just direct DM me through IG. Real Thomas Lorini is my handle. I've got a website, thomaslorini.com. I've also got my private investing firm, Venture Co Capital. That's where I do my deals. And I've got my team. Someone can reach out and get a little more information on the type of projects I'm working in. So yeah, I mean, quick Google search, you should be able to reach me and get my contact information.
All right. How does someone spell your name, by the way?
ThomasLorini.
All right. Again, that was Thomas Larini.com, I think you said.
Yep.
Okay, good. Thank you very much for sharing that. So you mentioned commercial property, or you mentioned apartments. So tell us a little bit about commercial properties. Why are you going in that realm now?
Good question. So again, there's so many different segments of real estate. Once I realized, owning the single family homes, there's pros and cons to every one. So the single family homes, the smaller, assets, if you have a good tenant in place, the property is in good condition, you probably, like you mentioned, you probably never hear from them. It's very easy to manage. But if the tenant leaves, you got 100% vacancy. So now you're scrambling to fix it up and find another tenant. In a decent market, that may take a month or two. Fine. But at the same time, you're making those payments. When you're dealing with multifamily, now you've got a number of units, right? So if you've got, let's say, a 10-plex and one person leaves, I mean, you still got like 90% occupancy. So you still have a lot of income coming in. You're not going to feel the same effect if one person leaves out of a 10-plex than in a single family home. There's also the growth factor. Multifamily real estate is underwritten differently than single family homes. And when you get in the commercial realm, and you know this, Kenner, as a lender, the type of financing that you can secure. So they underwrite the deal. Obviously, you want to know the experience level of the operator, but if the deal pencils up, you add value to the property. It directly impacts the overall value of the building significantly. A $200 rent increase on a single family home is not going to do much to the property. But a $200 rent increase across, let's say, 10 units could impact the value of the assets significantly. You're talking hundreds of thousands of dollars, if not, over 7 digits. So this is the difference. Your valuation is based on capitalization rate. So underwriting and value add, either force or natural appreciation, really impacts it significantly. I like residential multifamily personally because we're providing a basic human necessity. People need to live somewhere, right? You can get into commercial where office buildings, which has been significantly hit, more industrial businesses. I own some mixed use properties. Again, pros and cons. The vacancy rates tend to be a lot higher when you're dealing with more office buildings, those kind of commercial realm or retail. But you can go into triple net leases, longer term leases, a little more easier tenant to manage potentially. But for me, I really like the residential realm and just being very opportunistic in the markets and the opportunity I'm finding. And for the most part, with the value add, you get your hands dirty. Like you're putting a lot of time and effort and capital into improving these properties that have had, previous owners have really kind of neglected the properties. So there's a lot of, a lift that you can add to the property.
I think a lot of people don't realize. I learned early on in my real estate investing career, commercial made a lot more sense. And if you could, add on another rental unit or, increase the rent, it makes a big difference. I think you could do that more so in commercial and really in multifamily more than anything. By the way, I should do a reset. This is Thomas Larini. I was kiddingly calling him the Can-Am Man. He's you can get a hold of him at his website at thomaslarini.com, and also he's the I guess I would say the partner of Wealthgenius in the U.S. And also I'm Kenner French, vastsolutionsgroup.com. We're also now an vastassetdefense.com company. So all right, so kind of what's next for Thomas Larini and maybe the people Wealthgenius or the group that you deal with your clients or students or whatever you call them? What's kind of the next thing? What's on the horizon?
Sure. So within the group itself, the growth, just continue to support the current members, bring in new members. So we do regular events, live events across North America. We do also boots on the ground events where we bring in investors to different markets. So over the next few months, we've got another event in Cleveland, Ohio. We've got another event later in the year in Phoenix, Arizona, and then we'll probably be doing Florida coming in the new year. And those are very specific events where we're bringing investors in our group to these markets to educate them, bring in the local, power team so that they have support if they're interested in investing in that market. And we go and walk hundreds of doors. So they really see the landscape of that market from single family, multi-units, and then larger apartments, and then see if that's something that they want to potentially, start investing in. And then me personally, continually focused on, increasing my portfolio, but strategically. Last year, bought 108 units and working on those ones.
Look at you. I didn't know that. Nice work.
Yeah, thank you. I mean, so often, people share the purchases, right? And then, I want to buy more properties, but don't realize once you own them, that's when the work begins. And that's the thing. Like we bought these properties last year. I was working on another deal the last several months, but I had to cut ties on this last deal before closing, just because the scope of work and improvements increased substantially, and it didn't make sense. It didn't pencil out. So we basically cut ties on that deal. But working on turning over a lot of units on the properties that we did buy. So this year, doing several refinances, looking for my next acquisition as well. So that's kind of on the personal side. adding strategic partners to my team so that we can continue to grow and support the growth. And then the expansion of Wealthgenius across the US, more events across the US, and then again, bringing more members and really helping the members take action. Because I don't want it just to be an education platform and just people are just hanging out, networking, but nothing happens. It's really the action that's key.
Yeah, you're good enough, dude. I could see someone. I bet you are a good accountability partner, or at least you're probably a good leader as an accountability partner for a number of people. I can see you being very, very good at that because I think so many people sit on their hands and don't do anything. They're probably taking in all this information, but don't do anything as a result. And that's when you need an accountability partner. Like I would
Yeah,
you at.
100%.
Wait a minute, and you said something about you're doing strategic alliances, I guess, with some of your students. Tell us a little bit about that, because I think we have some people who are starting to think about that from both the student's viewpoint and also meaning your viewpoint on taking on a student. Tell me a little bit about strategic alliance in that regard.
Well, I mean, students come from either refer to us, attend an event, and then they want to join. They want to learn how to level up. Again, people are coming in brand new. They're very green. They don't know anything about real estate, and we just handhold them step by step. And it's a 1 year coaching commitment, right? So we're literally coaching them for an entire year. And then they're part of the group. There's a lifetime, enrollment, and you're a member for life. So there's no continuously having to pay anything afterwards. Once you're in our world, you got the support and you've got a lot of people to help you. So I always encourage my students connect with other members. You can learn also from them what project they're working on, that sort of thing. I mean, in terms of like strategic partners, so for me, my core group, like my team of partners that I've assembled to grow, because one thing I learned, Kenner, you can't do this alone. So for the first like 5, 6 years, I was doing real estate on my own. Everything, every call, every email would hit me. So I mean, I've kind of made a decision a few years ago. I want to create like a team within my company, a team of strategic partners. Basically, we're all equity owners in the various deals, and we all share the direction and commitment, and we have a vested interest for the success of the project. So when I say strategic partners, that's what I'm referring to. They can be investors, passive investors, or actually active partners.
Mm-hmm. Mm-hmm. Look at you. That's how you now the picture you painted. Now understand how you built this empire. And I would call it an empire. You're doing very well. That's pretty interesting how you built it, and you have a good story. I mean, I keep saying it, but I could see someone attaching themselves to you because one, you're a good guy. Two, I know you're smart. I didn't realize you're ME. Nice work.
Mm.
I would consider you a good leader, a good accountability partner. I could see someone, joining just based on you. So, okay, let's get ready to land this ship, this plane. So, what have we not talked about that can add some value to, let's say, either a brand new investor, new real estate investor, or more seasoned? Most of our people are more seasoned, but let's, as a walkway, let's give one
Sure.
tip that you
I
can
mean,
add value.
again, the whole idea with real estate, a lot of times we as investors, we get so caught up in real estate, it becomes the end all, right? But not able to step back and say, why am I doing this? For me, again, I have to make conscious decisions. Say, I want to create this so that it provides me the lifestyle and I get my time back to be able to do other things, like with my family. So I'm married. We have 3 young kids. We're really plugged into our local community church. We're probably at church like 4 times a week. Either, I teach Sunday school to the grade 5s and 6. We do like excursions. Like a couple weeks ago, we're up in the mountains for a couple days with 65 students. So being able to do other things besides the real estate, right? So yes, we if you like real estate, great. And that's one thing a lot of investors get kind of really into it. The passion's there, hunting for the next deal, but really being able to say, why? Why am I doing all this? So really clarifying on your why, and then being able to use the real estate to push your why to the forefront. And if you don't do that, the real estate will just gobble up all your time, all your thinking, all your capacity at the cost of other more important things, right? Like family and so forth. So I think that's something that's not really talked about too often, especially as a lot of investors are entrepreneurial business people, they're passionate. They put all their blood, sweat into this. But really the importance of why? What's your why? And if it's for a lot of people, your family, well then make that a priority, right? So when you're looking at your list of priorities, the real estate shouldn't be at the top. Real estate should be, potentially helping support the priorities.
I 100% agree with you. Man, on that note, that's the perfect way to close this episode. Man, I totally appreciate spending time with you. I'm sure our audience is without a doubt going to believe that they've gotten some value from this. This has been awesome. I'm going to ask you to come on one more time down the road because I think that this is a good fit. I'd love you to, keep speaking exactly what you're saying to more of the Canadian people, more of the U.S. people. Our audience really would appreciate hearing more from you. How does that sound?
I love it. Thank you so much, Kenner.
All right. Once again, this is Kenneth French, helping, business owners the best we can. And if you need us, vastsolutionsgroup.com. Once again, I'm Kenner with vastsolutionsgroup.com. Thanks, everybody.
Thank you.
You're the one in control.